Hey everyone, welcome to the Slice of Technology podcast. I'm your host, Jared Taylor. Joining me today is the CFO of Ori, Richard Tame. Richard, how's it going?
Hey, it's going great, Jared. Thanks for having me. Looking forward to chatting.
I'm excited to have you. I was mentioning to you earlier, you're in rarefied air on the podcast because we don't have many CFOs come on, and that's something I want to change. But today we have a unique conversation because we're going to talk about, how to scale companies from early stage up to IPO. But before we get into any of that, let's talk a little bit about Ori in terms of just tell us, for those that haven't heard of it, what is Ori? What does it do? What do you tell someone when they ask you, okay, you work at Ori now, what does Ori do?
Yeah, no, thanks for that. Yeah, you probably don't have many CFOs on because they're probably too boring, So hopefully we'll change that. But yeah, so I joined Ori about 3 months ago now, and it's a really kind of exciting company in the AI space and in the AI infrastructure space. So it's a UK headquartered company, and what Ori's trying to do is build the infrastructure platform for AI. So that's a software layer, and then also the ability to provide hardware to people. So essentially a GPU cloud, AI native GPU cloud. So anyone out there looking for GPUs, we have an on-demand offering. We have private cloud offering. Check us out on the website, ori.co.
What initially led you to want to take this role? What drew you into this opportunity?
Yeah, so my last role was at a self-driving company called Aurora Innovation, and I led them from Series B through to IPO and beyond. And that was really fun, right? Another high-tech space. It's really cool, a really cool business. It just, it takes a long time to develop self-driving technology, and Waymo's doing pretty well, but a lot of other companies haven't really got the traction yet. They haven't got customers, they haven't got a product. So after going on that full sort of journey from early stage startup through to IPO and beyond, and then be a public company CFO, I kind of wanted to change and would like to find something that had revenue and had customers, and that's what I found at Ori. A company that was very early in its life, but on this very sort of rocket ship-like trajectory in a space that's going to be very important to the world, both now, but also increasingly into the future. So the ability to get in there, make a contribution, and sort of scale with a business in a great space was what drew me to it. And also, like, interestingly enough, what we were saying before, like, you don't get that many CFOs on necessarily. It's often in early stage companies, it's hard to know what kind of finance person to get. And I think what we found with Marty, who's our CEO and founder, he's done a number of startups before, is he understood how important finance is to this business and this AI infrastructure business, the amount of money that we have to spend, the amount of money that's going to go through the company. And I think he was comfortable in making that investment in high quality talent from day one, because we think that's going to help us to scale quickly.
What is the kind of winning formula look with the CEO, CFO dynamic at these companies that you've helped scale from early, let's call it Series B to IPO? Like, what does that dynamic look like in an ideal scenario to get to that point?
Yeah, no, it's very, very circumstantial, right? It's very personality driven, I think, and very much what's the experience of the various people on the table. So from my perspective, I like to get a long leash. So what I want to be able to do is say, hey, CEO, founder, you have the vision, you have the technological experience, you can go win deals, you can close deals, you can tell the company story from that sort of sales and market and product led side. Let me go behind the scenes and run the company, right? Whether that's finance, whether that's legal, whether that's the people department, all the things that you need behind the scenes to be successful, to be able to scale, to be able to grow. But that isn't necessarily the best use of a sort of a CEO's time. That kind of blend, I think, is important, but ultimately it comes down to trust. Does the person trust you to do what you say you're going to do? Will they listen to you if you have an opinion? Do they want to hear your opinion? So very much like anything, interpersonal dynamics. And to be a good CFO, you have to be able to work with all kinds of personalities. You just have to know who you're dealing with and be able to adjust your style to what they need from you at that time.
And one of the things I want to go back to is what you mentioned earlier. So you talked about where you were at before. Across your career, like over the course of your career, I would love to hear what key lessons you've learned in scaling a tech company, and really which of those lessons you think you'll end up applying at Ori.
Sure. Yeah, so if you trace the arc of my career, like it went from really big companies, sort of increasingly down to smaller companies, I think, Ori being the smallest, earlier stage one. But what I took away from all of those big companies, the Facebooks, the Microsofts, the Amazons, even, is if you're going to be a successful company, you're going to be really big at some point. But the foundations that you've built along the way are very important to how successful you can be, how efficiently you can operate, how much fun it is for people to work there. And I think a lot of the times what I'd seen happen is the companies, especially in tech, especially ones who have been really successful, didn't invest in the people, the systems, the technology, the processes early on. They probably thought they had better things to do. They maybe didn't have that level of financial expertise that knew how to build something for the future. And they got by, they made things up as they went along, they raised enough money, but they hadn't built that structure. So as you start revenue piling on, customers piling on, complexity piling on, you have people in finance, for example, sort of carrying a lot of water, like, doing heroic kind of things behind the scenes to keep things working. But at some point that breaks. And then you end up with what happens in these really big companies, like massive, finance transformation projects where you're having hundreds, if not thousands of people, external consultants sort of getting their hands in and trying to transform finance. And it just struck me that like, that's so inefficient. And a lot of the decisions that go through this finance transformation process could have been fixed if you'd thought of it at the start, built the foundation strongly, and just kind of grew off the back of that. So that's what I was able to do at Aurora, helped us to go public via the SPAC process, like in record time. I think we were top of the league table in terms of how quickly we were able to do that. And that's because of the investments that we did in the team and the systems and the policies and the procedures. So taking that to Ori and saying, look, who knows what's going to happen in the future, but we want to be a successful company. Like we want to do an IPO, perhaps we want, maybe we'll get sold, irrespective of how this turns out. If we can build the right financial infrastructure today, that's going to help us scale, and we're going to save ourselves a ton of work down the line.
So you've obviously, across your career, you've played a big role in fundraising and helping with the investor relations part as well. So how do you plan on approaching this at Ori? And one of the other things, you and I talked about this on a previous call, right? Like how do you kind of attack that in the fast evolving AI sector where there is a lot of money being invested? This is important, I think, for other AI companies to also hear, because not that this isn't necessarily a new lots of funding going in, fast moving. We've seen this before in other spaces,
yeah.
But to AI, this is obviously still relatively new.
Yeah, for sure. I think it's a big question, and you could say, is there an AI bubble? Maybe that's what you were sort of thinking about saying, but I think we all know that AI is a thing, right? Like, and if you believe AI is going to be as big as it's going to be, the amount of money that's been invested to date is still a fraction of what's going to be needed to be invested in the future. And investors are excited about it, right? They know it's the next big thing. They don't want to miss out on it. So you have a lot of people interested in funding companies. So from my perspective, at Ori, because we're on that infrastructure side, what we're doing is we're taking away some of that need for CapEx that developers or like app providers have, enterprises have, and say, look, like we can look after the infrastructure. You guys don't need to look after that. You don't have to have the CapEx to be able to get your GPUs on the ground. Come to us, we'll handle that for you. You can concentrate on building your app. So they have a different fundraising need because of that. We see, a lot of investors are interested in the space. They've seen some of the, the core weaves, for example. They've went down an interesting kind of journey and provided GPUs to people. They've needed to raise a lot of money, and they've been able to do that successfully. There's different sets of investors. So because we're kind of heavy on the infrastructure side, we actually have physical assets to finance. So we're more able to kind of take on debt and do more like, say, like an aircraft leasing kind of model where you have like long-term assets and you can finance them with debt over the long term, less so much of the kind of the pure equity need that like a SaaS company would have, for example, where they're hiring salespeople, they're helping to buy customers, and they have a bunch of software engineers. So you just have to be flexible, right? You have to have a really good story, and you have to know why you need the money. What's the best way of building that capital stack, who are the right investors who are going to be with you for a long journey, because whatever you raise on Series A, for example, you're going to have to come back to Series B, C, D, and the numbers are going to keep on getting bigger if you want to be a player in this AI infrastructure space. So there's just a lot of factors at play. But the key things are: do you understand your numbers? Do you have a kind of a line of sight to a profitable business? And have you got a good story? And then things like, do people like to work with you? That actually plays a lot into it as well, I think. When people have a lot of opportunities of where to put their money, I think some of that interpersonal stuff and the ability to tell a good story and have a good dinner with people probably goes a long way as well.
Richard, when you foresee the demand for AI native cloud services evolving, what role do you see for Ori as this market continues to expand?
Yeah, for sure. So I think there's various ways to tackle that question. One of them is the training to inference kind of growth. So right now there's a lot of training going on, there's less inference going on. But if you think about the arc of what's going to happen with AI, once you've built a model, you train it, and then you put it into the world, and then inference at that point, we think Ori is going to be significantly bigger than training ever will be. Because if you think about it, say you're an airline and you put some AI apps behind your booking engine, for example, right? Very typical kind of use case. You can see why that would make sense. Probably better for consumers, better for the company. But every time somebody opened their airline app, went to look to book a ticket, if it touches the AI part of it, it has to go and hit a GPU. So if you think oh, well, that's an airline, and then there's multiple airlines, and then there's multiple banks, and then there's billions of people in the world, you very quickly see oh, wow, these crazy numbers around how many GPUs are needed in the world is totally believable. So we think that there's going to be a bunch of really, really big companies who can provide AI infrastructure, because there's enough demand to go around, and there's a big world as well, right? So Ori's a UK company, so there's advantages of being a UK company when you're dealing with, the UK and European people. Maybe they are less inclined to use American companies, and then there's the rest of the world as well that's going to come online later. We just think if you're an enterprise, or you're a AI developer, an AI lab, or whatever you are, do you really want to own your own GPUs? Do you really want to have to deal with 1,000, 10,000 GPU clusters, finding the data center, finding the power, designing them? Does the InfiniBand technology work properly? What happens in 2 years when some of them break, right? Cloud has been a very sort of popular way of people handling their infrastructure needs. And we think that'll continue. But we think that the transition from sort of CPU and storage based cloud, like cloud 1.0, like what the hyperscalers were really good at, we think that AI is a transition point into a new set of infrastructure. You need different data centers, right? Do you need liquid cooling for some of these future ones? You can't really go back to a data center that got built 20 years ago and retrofit it for liquid cooling. Or if you do, it's going to be super inefficient. So that gives you the ability as a company like Ori to come in and sort of stake your claim to be a big player in the new world. The hyperscalers will still be there, obviously. They'll still provide GPUs. Maybe they'll provide their own chips into the future. But there's going to be companies like Ori who have a real chance to become very significant players in this space.
I'm glad you mentioned the data center piece, because that was one of the things I wanted to ask you next. I'm sure, along with a bunch of stuff, right, as part of your role, something that's probably top of mind is also seeing, how does Ori expand its data center footprint? And I would love to hear more so the challenges and opportunities that you anticipate when it comes to scaling up that infrastructure to meet the needs of AI driven workflows.
Yeah, for sure. So I think it's I worked at Facebook and led finance for their data center effort through their first probably hyperscale period, and then it got to I did that for 4 years, and maybe towards the end it's oh, have we built too many data centers? And then fast forward a few years after that, and it's oh, again on this crazy trajectory that they're on. So there isn't enough data centers, and there isn't enough power in the world for what's going to be needed. So there's going to be a big rush of building more of that stuff. If you translate that into Ori, What happens now is, we have the sequence where we find a customer, the customer needs a certain number of GPUs, and they need that cluster to go somewhere. So we take the demand and then we go and work with our data centers, the context we have in the industry, and we sort of find the space to drop those clusters in. That's not sustainable in the future. And I think if we are as successful as we expect to be and we want to be, we're going to quickly get into the place where we design our own ORI-specific data center campuses, and they can be optimized for AI workloads. So they can have the right cooling in place. They can be in locations where the electricity is abundant and cheap. And the data center just is very efficient for the workloads that we need to run on the GPUs that we put in there. Again, there's like a CapEx need for that, so you can't get there immediately. But we fully expect that we'll take advantage of colo facilities for the time being, but we'll ultimately be an owner of our own data center infrastructure, and then you control it, right? And then you control the design, you control what servers go in where, and you don't have to worry about being an everyman kind of data center, because you know exactly what's going to go in there.
When you're building out your team, right? So you've obviously you've been at this. This is not your first rodeo. What strategies do you use to create, to foster that collaboration and drive excellence throughout your team? Because I just think it is a big challenge for you to, these high growth companies that you've been a part of. It is not easy, right, to build these teams, but also all the other tasks that you have to do. How do you end up creating the best collaboration and kind of creating the best internal finance team?
Yeah, it's a challenge, and you have to be good at it. You have to know people, and you have to kind of want to do it, right? You have to understand how important it is to manage the team and to hire the right talent. There's various challenges. One of the challenges is, if you're a very small company or you're early in your life, you've obviously got great plans for the future. And, you might be wanting to move really quickly. You might be moving really quickly, but you're limited in terms of resources. So you're limited in terms of how many people can actually hire into the finance team. And you're also limited in the compensation that you can offer people. And different people are at different stages of their life. So what you can find is the sort of the quality of talent that you need, they're not prepared, or they're not able to kind of come down to the level that you need and take a big risk. So you have to kind of deal with that. And what ultimately happens then is the people who can join a company at, say, seed to Series A are probably different to the people who are available to join a company from Series A through Series D. And then after that, you probably have a different set of people. And those people, some of them are more comfortable working in these bigger companies where there's already the processes in place. If you're great at a pre-seed company where nothing exists and you want to get your fingers stuck into everything, you probably aren't going to be great when you're a public company. There's very few people who can actually go through that full arc. So as a leader, especially in a company that's going to grow really quickly, it's super important to have a sort of a bench of talent, and ideally people you've worked with before who are comfortable kind of getting their hands dirty, doing journal entries, chasing payments, doing all of this kind of basic stuff, but that they have the strategic mind and the experience to be able to grow and build the right infrastructure for the future. So part of that comes from building a network of people over time that you've worked with before, but you also don't want to just have a bunch of yes men that you've already, that you've worked with. You need to inject new blood into the system. So you have to kind of be able to balance those things. But it's very important to kind of have a robust interview process. And really be honest with people, right? Like, say, this is going to be terrible. I usually lay it on very, very thick in terms of how bad it's going to be and what you're actually going to have to do on a day-to-day basis, because I don't want any surprises, and I don't want people to have, missed expectations. Because a lot of people say, like, yeah, I want to work at a startup, man. I want to have that responsibility. I want to grow really quickly. But when they actually see what that means on a day-to-day basis, like, they can be like, oh, well, actually, I quite like Facebook and being able to go to the micro kitchen and take all those snacks and all of that good stuff. So being honest with people through the interview process is very important to match in.
Yeah, I saw a talk recently with it was one of the founders of Google was talking about why wasn't maybe Google farther
Mm-hmm.
ahead with AI, right? And he's like, we kind of focused on all the extra stuff to make it a better like work life balance, workplace, right?
Mm-hmm.
And which it, you know, he wasn't saying it as a bad thing, right? They made the
Yep.
decisions to I mean, creating a great working environment is by no means a bad thing. But I think to want to truly work at a high growth company, people need to get comfortable with a certain way of how things are done. And you can't have at a high growth company the same level of kind of work life balance.
Yep.
It's just
Yep.
it's so as long as people know that and the
Yep.
expectation is clear, totally fine if someone doesn't want to do that, right?
Yep.
But that's what makes your job even more difficult is you need to find the people that
Right.
aren't just saying they want to do it, actually want to do it.
Right, exactly. And it's easy to think that you want to do it until you've actually done it. And again, if you're going to move as quickly as we're going to move at Ori and as quickly as we did at Aurora, you can't just hire a new team every 12 months when the company's changed either. So you have to find people who can grow and can move up and down the stack. But I think the Google thing's interesting. Facebook's the same, right? Like their business models were so phenomenal and so different to anything that had gone before, really, that they were able to do crazy things that made sense at the time. But again, when you have 200,000 people, right? It's a different story to when you had like 1,000 people or 100 people, and the way that they were able to kind of compete for talent, and the money that they were able to sort of put towards that, I think is it's coming home to roost to a certain extent. So when you're in a small startup or a quick startup, you're like, how do I reward people appropriately? What are they getting out of working for us? But you're sort of conscious of some of these decisions that other companies made that they find it hard to get out of now, and maybe wish that they'd done something a little bit different. So that's always in the back of the mind when you think about, what perks are we going to offer? How many drinks are you going to have in the micro kitchen? Are you going to be a remote company or not? Things like that.
The big decisions.
People don't like things to get taken away at the end of the day, right? It's, you give something to people in a 15-person, 20-person, 50-person company, you find it very, very difficult to take it away when it's a 1,000-person company, even if it's something that seems very, very trivial. So
I remember working out of the WeWorks in the earlier days, and people getting pissed once they took away like the keg. You remember they had like the keg on tap at those places. That was like one of the co-working perks of that.
Yeah.
People were not happy when that went away, but it's Anyway, so you've been at it now. As we wrap up here, it's been a couple of months. What does your ideal next couple months look like as you're still obviously getting comfortable in the role and at this new company?
Yeah, no, I mean, I feel like I've been here, a long time. So it's one of those great experiences where very quickly you feel like you're part of the furniture, and you've sort of been around the company for a while. So that's great. We continue to get new customers, continue to see new challenges that we have to overcome. So the next few months is a fundraising journey, really, right? We've got a few customer deals that are in the pipeline that need to be landed, turned over, handed to the company, get that revenue tap turned on, and then at the same time, actively looking to raise a round to be able to keep our runway ready for 2025 and 2026 and beyond, and being able to kind of make those strategic decisions, which says, all right, what do we need to do now to grow the platform to be able to support a much bigger set of customers, much more GPUs into 2025, 26 and beyond. And, fantastic growth opportunity. The end of the decade looks very, very different to what today looks like. But we have to get there, and we have to build the infrastructure and build the team to be able to do that and take advantage of the AI boom. And also, like, when enterprises who are sort of sitting on the sidelines now, they may be doing proof of concepts, the real demand is going to come when those guys and girls say, like, yeah, we really like this AI, we need this AI, and they get their models out into inference. Like, what we've seen to date is going to look like, chicken feed, I guess they say, is but until what the revenue, the costs, and all of that good stuff is going to look like in the next little while. So exciting times to be in the AI infrastructure space.
Absolutely. Well, Richard, I want to thank you so much for joining us here today and making a case for why we should bring on more CFOs.
Yeah.
Thanks so much, and look forward to future conversations.
Yeah, happy to do it again. We'll see where we are in a few months, and it'll be a totally different conversation then. Thanks, man. Really appreciate it. And thanks for all the stuff you do. It's great content that you're putting out there.